Hello and welcome to Welcome Home Radio. The waters in the mortgage industry can be pretty muddy, whether it's investing, leasing, renting, home insurance, or myths and misconceptions. Welcome Home Radio has the answers for you, the consumer. And now, to help you make the right home buying decision for you and your family, here are your hosts.
And welcome to Welcome Home Radio, where real estate lending and learning come together. This is Mortgage Market Update for April 14th. Stocks are moving higher. Bonds are trading at near unchanged levels. That really means we're still at historical low rates. The MBA released their mortgage application data and volume decreased by 3.7%. Purchases were down about 1% and refis were down 5%. So activity is slowing down somewhat in the market due to some of the things we're going to talk about again, being a seller's market. Yesterday, CNBC seemed to try to dictate that there's a housing bubble like 2008. Tried scaring many homeowners. We are already there. We are in a different market. Demand is very strong, increased due to birth rates. Supply is at records low and not getting any better. Forbearance will be mitigated due to equity in homes, and affordability is not like the media suggests. Jerome Powell will be speaking later today, and we do not expect any meaningful update from him. We will probably hear a double down on the fact that the Fed will not hike rates or reduce purchases of bonds until they see improvement in inflation or labor numbers. So with this information today, we'll be discussing what's happening in the market, the buyer, the seller market, and what are some considerations on both sides that we need to be aware of. We'll also be discussing what is taking place with market rates in decisions with investors, as well as secondary homes, all that are taking place. So again, going to be an exciting show. Alan, how are you? Good to have you here, sir.
Good, Blair. How you doing, buddy?
Man, I'm blessed and highly favored, and congratulations on your multi-million-dollar year. You had a great award there. So, and any Baylor fans out there, we want to congratulate you. Congrats on winning the NCAA March Madness. What an event. It was awesome. Great playing. So, Alan, you and I were talking about doing the show, and it is a seller's market, but there's some crazy things that are happening with offers, bids, who's winning, who's not, why not. So really want to get into this because, I mean, I have several buyers right now that they're paying anywhere from 12 to, well, 3 today, 3,000 over, up to 23,000 over asking. What is happening out there? Give us some feedback. Help us understand this.
Well, supply and demand is at work. A lot of demand and not a lot of supply. So as with anything from toilet paper to housing, it's playing its role. But specifically in the offers, it's very creative right now. As you know, a contract is designed by lawyers, and as a real estate agent, what we do is fill in the boxes, and you can be very creative filling in those boxes and parts that realtors fill out. And right now it's a seller's market, which means people are doing a lot of things. Starting on the offer itself, it's high. Generally it's higher than what the house is actually worth. That's going on a lot. How you write an offer matters, because what you're trying to do is get your buyer, the seller, to see your buyer, and that offer is the best one. Well, besides price, there's things like the option period. An option period is when you go under contract and you have somewhere usually 7 to 10 days to do your diligence, inspections, things like that. But now people are doing 2-day option periods or 3-day option periods. And the standard a year ago was $100. You give that to a seller, they take the house off the market for the days you're doing your diligence and go on from there. Well, option fees have gone anywhere from $200 to as high as 10,000 bucks.
10,000, really?
Yep. I'm on a lot of different realtor rooms via Facebook and other areas that we access, and around this country, it's very creative. You basically are putting $10,000 up. You're going to lose it if you walk away, but you are getting the seller's attention, because $10,000 is a lot of money. But on average, they're $1,000 or more anymore. And then you get into the appraisal of the property. If you're borrowing money, of course, Blair, you're a lender. Things have to appraise. You have to make sure that the companies that you represent can be paid in case the buyer goes faulty. So we have at our disposal, through Texas Real Estate Commission, a waiver form for appraisal. And basically, a buyer can just totally waive the appraisal. And what that means is look out.
I want to make sure the way you're saying that is understood by our listeners.
Right.
A buyer is waiving the appraisal value that will come in, but the appraisal will still take place for the lender. The lender does the appraisal, but the value, they're saying, I'm not going to negotiate to that appraisal value. I've already negotiated my offer, and I'll pay the difference between the appraisal amount and the purchase amount.
Yeah, so, in layman terms, if it's $100,000 listing and it appraises for 90, so there's the appraisal. Now the lender knows what they're working with, and a buyer can simply come in and say, I'll pay the extra 10 or the extra 20 or the extra 30. And you move on down the road. So sellers are looking right now at cash. They're looking at strong conventional loans, and the occasional VA loan is good because some veterans have money, and they're willing to spend it. So,
or sellers are preferring that, if I'm not mistaken. In some cases, the seller does prefer VA over other things in the effort to support the veteran. Is that correct?
Yeah, you see that. I wish you saw it more, but you do see it. There's, you're talking about the biggest piece of equity, which is what most people's worth is. 90% of their whole net worth is their equity in their home. So they are being more businesslike and less lovey-dovey like. But yes, I typically see veterans supporting other veterans. I see patriots, supporting veterans. I see, actually, there are all walks of life supporting veterans when they choose to, but I wouldn't say it's a big majority of people. So conventional still rocks as far as, they'd rather see somebody put $100,000 down than nothing.
And cash is king.
Oh yeah, until Bitcoin is, or whatever. But right now, that's the case. And there's other ways to be creative in that contract. You have things like third-party financing. You can doctor that up a little bit with how many days does it take to get approved by a lender. And that box typically is 21 days. And, most realtors that are on the buying side want it to be long because we want the appraisal to come in. But a lot of people now are putting 7 days, 14 days. And I don't do anything like that as I'm talking to you, because I need my facts before I can represent my client correctly. But
exactly.
The thing is, we both work for somebody when we're, you're lending and I'm helping them buy. We work for those people and we do what they tell us. We can only give them good advice, which we do, ever the deal. So you can be really, really creative with contracts, real estate contracts. And right now that is exactly what's going on. Creativity you would not believe.
I would put in a summary on this is that, anytime, no matter what industry you're in, contract is 100% negotiable, where sometimes you may feel it's not. Things are even more so 100, they're negotiable, like option fees, appraisals, and again, as is seems to be a very strong support of, I'm going to either not inspect, or my inspection, I'll waive all critical issues or so forth. It's just amazing to me, the experiences out there. And in your time, have you seen this happen before? Was it back in 2005, 2006? What do you know, and what can you tell us about this happening? What does it mean to us 6 months down the road?
Well, it's been my experience. This is very, I want to say the contract things they're not new. I mean, you can waive an option period. You can just say, I don't even want to inspect it. That's your right as a buyer. That's going to get attention. Okay. They're in. So, but I've not seen it this drastic where people are putting so many different things in that contract, waiving their rights as a buyer completely. New construction contracts generally, favor the builder, right?
Yeah.
All the way through. A builder can cancel a contract. And some are actually doing that. They're under contract.
Really?
Yeah, it's happening. Prices of things have gone up. Some factories aren't making certain things. They can't get the materials. So there's issues there too. So there's two things to summarize this for anybody watching or listening. Never in real estate has there been a time where you need somebody who's got experience. You need somebody who knows what they are doing and how to do it and how to communicate it with love and perfection to a seller. Okay? Big time, important. Never seen it like any more important than right now. When more and more people are trying to choose to maybe go it alone, this is just not the time to do that. You will lose your butt. So, seller is king. That's not new. Just 3 years ago, it was kind of that way. Not quite this drastic, but sellers were booming, but I've not seen it this gun ho for a long time. Back in 2005 and 6, in fact, I bought a house at the very hot peak, just before the tump. So I'm in the business. So the other thing you tell your clients, I tell my clients, you can't time a market. I don't care if you're CNBC. I don't care who you are. You can't time a market in real estate. You can have a feeling and you might hold off or you might hurry in, but you can't predict it. So real estate is all about buying and keeping, hanging on to it for a while. Just like me, when I bought high and I'm in the business, I'm looking really good now on equity. It's gone through the roof. So you always look at real estate as a long-term proposition, unless you're a flipper, that kind of a thing. That's totally different. But if you're a homeowner looking to upgrade or downgrade, or an apartment dweller looking to buy their first home, you want to look at time and you want to be in it a while. Reason I'm saying that is, in today's market, you're going to pay a little bit more than you would think. But if you hang on to that thing for 10 years, you're going to do well. It's just the way it is. Things go up and down in the market. The stock market goes up and down. Housing goes up and down. Everything goes up and down. So, but I disagree with CNBC. I do not see a bubble.
No, I totally agree with you there. It's not a bubble. We have higher demand because of, if you look back roughly 20 years ago, we saw a birth rate growth that matched what the baby boomers did. And so again, we're seeing great demand, limited supply, and you're right, in reference to builders. Builders are having a hard time getting materials. Builders are thinking they have control of the situation. They discount realtor fees, or they discount other things as well as I saw, in fact, one of the other shows on KVGI Media, if you follow along, he just talked about HMS lending, and they had a client on there that they thought they could resell a home at $250. All of a sudden the builder, nope, it's $300,000, added $50,000 to it, and they weren't going to budge. And It's like, wait a minute, we had another buyer, since that one fell through, that could do the 250, but not the 300. And it's a seller's market right now.
Another thing that contributed to this that we absolutely had never seen is we have to talk about COVID. So COVID happened a year ago, last month, let's say, kind of got booming, right? Everybody was afraid to move for a couple of weeks, couldn't touch your groceries, couldn't touch your, anybody, anything, anywhere. So, but obviously companies made people start working from home. And what is going on right now when you read the stats is home remodeling companies are having absolute records broken on business. And so when a homeowner puts $50,000 into their house, they're not in any hurry to leave. Thus, they don't list it. And they're not even in the market. So we've lost a lot of that because people have chosen to be home. They made it nice. They added the pool, or they put another room on for an office, or something in the backyard where they could go out and work and things like that. So that contributed to it too. But it's kind of was the perfect storm. We had COVID, shut down, stay home, work from home, government giving everybody money, and you had, people that are pretty happy. They don't have expenses like toll tags anymore. They don't have to spend $100 a month on the toll roads and no gasoline. So people have chosen to stay, and they look around and they go, hey, we got it pretty good here. Let's just put a few bucks in here. It's what we would have spent on gas anyway. And that logic has helped people stay put. But I will say one thing. I'll say it right now. I kind of sense, even though things are selling fast and there's not a lot of them to sell, a slight little baby moderation of that. For the first time in quite a while, I've seen several back on the markets. Okay. That means somebody got a house under contract, went under contract for 7 days, 3 days, whatever it is, did their diligence and decided against it. Okay. Another reason that happens is if people put contracts down on 2 or 3 houses. They offer the moon and the listing agent doesn't see through what they're doing and they get awarded the contract. Well, they simply back out. They don't care. So that's happening a little bit. But also, I want to add one more thing. So I have an appraiser friend, not personal friend, just an acquaintance. And before I make offers, I call him. And he flat out said, he goes, Alan, before we even get there, we'll look at that list price and, on a $300,000 house, we'll automatically think 290 right off the bat because we think it's overpriced because the listing agents are overpricing. He said the best advice I could give a listing agent is to price it with market and let people bid it up if they want to, but price it that the appraisal says it can meet. He says appraisers like that. They respect that. It's not their job to buy or sell a house, obviously, but an appraiser who's been doing it for a while is going to walk into a $300,000 house and know it's not a $400,000 house because they walk into them all day too. So, so the appraisers are very busy under the gun. They have to answer to people when they bring in their appraisal. That's why they're 26 pages long or whatever they are. And so he gave some good advice, and he always gives me good advice. And it's good to know an appraiser. I'll say any realtors watching out, that might be watching or listening, get to know one of these appraisers. It will help you a lot. It's, we have lender relationships. Appraisers are a good relationship too. Just somebody you can pick their brain. We've had them on the show before, not this person, but we've had appraisers on the show. And I swear to you, I've been in this business a long time and I learn something every time the appraiser comes on. So get to know an appraiser. The other thing is your lender will be happier with you too, because you'll be more knowledgeable about how it works and get involved that way. So, but yeah, bottom line, seller's market. I feel there's a baby easing, but I don't think it's going to be the cliff dive that CNBC, these media outlets, they are about ratings. And if they can get your attention and get you excited, all you're going to talk about when you go have your beer is, did you see that? There might be a housing bubble, or the stock market's going to crash, or the COVID shots are failing or whatever. It's all about the dramatics with the media. So look at your own markets separately. If you're in Cleveland, if you're in Detroit, if you're in LA, wherever, Dallas, Fort Worth, we're all a little different, but every market's busy.
Yeah. Now, the second thing we really want to get into is what's happening with rates and understanding what pretense Fannie, Freddie, Ginnie are doing. And one of the key things I want to make people aware of is that investors and secondary homes, the interest rates have all been raised. In fact, if I go in and look at my rate sheet, I'm generally going to be around, where par is. That's what I can get that rate for no cost. I'm sitting around 97.5% for secondary and investor. It can be as much as 95%. So investors, secondary homes, in purchasing them are going to be really hard. That means they're going to be hit with a rate cost on any of these types of products. And what they're trying to do is they're trying to keep 2008 from happening again, because that's where a lot of the issues were. People, if you have a home, you have a lake home, and let's say you're an investor, you have a investment property or two, you're going to pay the bill on your primary home only if you get into trouble, if something's happening. That secondary home, that lakefront home, that investment property home is not going to be paid on. And therefore, they're trying to make sure that those are very clean, and they're limiting our capacity for that type of solution. They brought us down from 14% down to 7% within our own company of our loans being in secondary and or investment property. So this is happening in the industry. So if you're looking to get into investments, if you're looking to get into a secondary home, realize what you might be running up against and why. It is not the lender. It is not our choice. It is their rate sheets. Unless they have their own booking, their own book of business that they maintain and support and service, they will be selling this to Fannie, Freddie, Ginnie, VA. All of them are raising their rates on investment and secondary homes. So want you to be aware of that situation, because I think it's critical that we understand there's somebody in the government eyeing the real estate industry. They're eyeing it for tax purposes, that they can get additional dollars to tax government programs for. And they're also eyeing it to keep the bubble from happening again, like in 2008. Make sense?
Makes sense.
Good word. Well, our next show is April 28th. We're going to be 2 weeks out. Hopefully, Tom can join us then as well. But I think it was a great time. I appreciate you taking the time and all the information you shared with us, as well as, boy, it's getting crazier. And I still can't believe somebody's, shortening down the days and paying in excess of $20,000 over. So,
God, it's so much worse than that. Some of the stories I've read, and I've talked to people personally, it's six figures over. And those that have can buy. And, you can't blame a seller. Everything's worth what somebody will pay.
Yep.
And that will continue to be the case. The Federal Reserve is trying to watch things, and it's just a crazy combination of perfect storms that are going on right now, and it's making it tough on a buyer, and it's a little frustrating. And I know some of you are frustrated, especially the first-time home buyers who have done everything right, saved money, got Blair to give you one heck of a good interest rate, and there's nothing for you. But I will tell you, there is something for you. We always find it. Sometimes it takes longer, but we will find it. And I'm speaking for other realtors too. They will find it.
Yes,
so hang in there and don't get too frustrated. We're all going to get through this. And when you do get in your home, it's going to be the right home for the right reason.
There you go. Well, thank you again. Happy April 14th. I'm Blair Thomas.
I'm Alan Pace. Thank you.
God bless. Y'all have a great rest of your week. We may be too short for Mark. He may realize we're done.
Well, I tell you what we'll do is we'll keep talking.
How's your golf? Hey, did you see that? Did you see the Masters? I mean, my goodness, that was unbelievable.
All I have is a hat. I've never been there, but
you watched a little bit of it, didn't you?
honestly, I did not.
Oh, really? This young man was the high amateur 10 years ago in 2011.
Wow.
And he ends up winning 2021.
He's having a good year.
He's having a real good year. And again, it's the first time Japan has had a winner of the Masters.
And we can segue right back into the housing there. It took him 10 years. It's only going to take you guys 6 months a year to get a house. So, so what are you seeing though, lending wise, Blair? You're still getting a lot of applications, and you're approving. Is just having a hard time getting your clients fulfilled, right, into a home.
The approval process has not really changed that much. We're seeing guidelines changing. Down payment assistance programs are changing. They're requiring higher credit scores, lower debt to income ratios. They're not as flexible on reserves. There are things that I see just tightening of the industry because more and more people are trying, but we're tightening everything down. Mm-hmm. So it's a challenge out there, but it looks like Mark is back and ready to go, and we'll see everyone April 28th. Appreciate the time again. Thank you, Alan, and thank y'all. God bless.
Thank you. Bye-bye.